welcome Ashi Anand, who is the founder and CEO of IME Capital. Hi Ashi, good to be speaking with you. And nothing is actually holding up in the markets, and yet again, even today, the same story continues. We are off the day's highest point. But Ashi, help us understand that which are the pockets that are looking attractive to you right now, and what are you buying in this market?
Hi. Firstly, thank you so much for having me on the show. So it is a tough market, and we believe that markets may remain a bit muted over the shorter term. I think the way we are really approaching the markets is there are different kind of pockets to play different kind of time frames of the market. So if you're looking at the current kind of market environment, you probably want to be a little safer, a little more defensive, stick towards kind of so we're sticking to large and mid caps. In terms of specific pockets, spaces that we like, that we believe could also do well in the nearer term, banks is clearly a segment where there is a lot of kind of value. There are some shorter term challenges, but we believe those shorter term challenges are kind of well within manageable levels. And especially kind of pockets where they have some amount of pain, the kind of price correction that you've seen seems a bit disproportionate. So I think the banking space is one space that clearly does stand out quite a lot. While remaining in a bit more of a defensive posture, some amount of allocations towards consumer, IT, and even pharma, traditional kind of defensive segment parts of the market, which are likely to remain defensive in the near term, probably make a certain amount of sense. Digital is clearly something that we see a lot of merit from a longer term perspective, but we've always looked at the space from a different approach. It's a more a private equity style, longer term investment view. You can't really predict how these stocks are going to do in the nearer term. The last element is that if the kind of current sharper than market declines that you're seeing across small and mid caps and certain kind of key sectors, right, with a lot of business momentum, uh, including capital markets, capital goods, real estate, we believe that some of these kind of companies had probably moved ahead of kind of valuations and fundamentals. As these correct, we believe that this is really the space which is likely to deliver a lot of value creation over the coming decade. And it's a space we're kind of watching to wait for the dust to settle because we think a lot of interesting buying opportunities could emerge there.
All right, so the banks is the place to be, is the take coming in from Ashi. And Ashi also helps us understand that given different time frames, how you can actually go ahead and position yourself amidst this market where every positive news flow is not rewarded that much. But yes, indeed, if there's a negative news flow, the stocks are punished like anything. Definitely the case in point being the biggest talking point of Ultratech entering the wires and cables. But before we wrap this up, Ashi, help us with your take on the auto space as well, because this particular, in a couple of days, we'll also get the February auto sales data, and this time we are not expecting much of a decline. Despite the fact the auto sectors and the stocks are not performing that well. Give us a sense that what is your reading into the sector?
So, you probably have to again break this up between auto OEMs and auto banks. Auto OEMs is actually a place we are not very positive on from a longer term perspective. What you are seeing is a clear technology transition away from ICE towards EV engines. We don't really know how rapidly this is going to happen. There are different estimates. You are likely to see this first happen in two-wheelers, particularly scooters, and then move towards cars. Now, as this kind of transition is happening, a lot of the market share numbers that we've kind of taken for some level of granted over the last 5, 10 years, there can be significant disruptions happening in terms of how market shares would evolve under the new technology. You have a lot of new entrants that are coming in, Ola, obviously, in two-wheelers, but you also have kind of Tesla potentially coming in terms of EVs, etc. So longer term competitive dynamics and profitability under kind of this newer technology is something which I think is still very uncertain, which makes it difficult to take a clear longer term call on auto OEMs. We accordingly kind of believe that auto OEMs in the nearer term are a bit more of a trading play as you kind of see a cyclical uptick in terms of demand. These will probably do well. Now you've kind of already seen a bit of a run in some of these auto OEMs over the last couple of years. And in the current environment, where you're seeing an overall kind of growth slowdown, with the exception of specific counters that may have specific things going for them, it's not really a space that we are currently very bullish on.
In fact, hear out some of the other market opinion as well that we've been getting. We did speak with Bernstein just earlier today and got in their thoughts on what they're making of pockets of interest in the market right now.
A reversal of the tightening moves that RBI used over, say, let's say, last 12 to 18 months. I think things are getting better, and therefore we are probably off the worst point in terms of growth. We should start seeing an improvement in growth. And in terms of a pecking order, we still prefer the large private sector banks, with HDFC, ICICI, and Axis being the top picks for us. The reason being that while the overall liquidity environment improves, we don't see a rapid growth in the consumer credit space. So we prefer lenders who have a more diversified portfolios, and hence the preference for the large private sector banks. Liquidity improvement would definitely benefit the overall space. But we don't see a big rebound in the consumer lending space, right? So if you look at even RBI's recent actions, the risk weight reduction has happened more on the MFI space, the lending to NBFC, rather than a direct cut in, say, risk weight of consumer loans, which was increased a little more than a year back. So we think that space might not see a big deterioration in terms of asset quality, but would growth come back to what we saw in, say, 23 and parts of 24? Answer is no. And hence we prefer the more diversified lenders who also benefit from liquidity. So if you look at the large banks itself, the likes of Axis and HDFC are levered quite significantly to liquidity, and an improvement there should help their margins quite significantly.
All right, but moving on back to the markets, what we are getting in terms of the big headline is that India is mulling tariff cuts on cars, chemicals as Trump duties loom, and that's the news flow as per the sources. And definitely, of course, on the back of on the expectations that the tariff cuts could be announced, at least in the automobile industry, we have seen what has actually happened with some of these passenger vehicle counters, especially case in point being M&M, which has fallen quite significantly in the recent times with respect to the threat of Tesla's likely entry in India. But other than that, chemicals is actually one of the other interesting names that has actually perked up. But Ashim, help us understand that how do you see the chemical counters placed, and if this tariff cut is announced, any likely impact that Indian players can have? Your first thoughts on this?
So on chemicals, I think the current kind of problem is you're still in an overall weak global economy, and a lot of kind of Chinese supply that had kind of gone away during COVID is actually back in the market, and it's causing a lot of kind of pricing pressure. You've seen this probably hit the worst over the last year. Things have improved going into this year, but it's still a kind of a marginal recovery. You kind of need to look at it specific product segments, because there are certain specific product segments where pricing pressure is higher, certain other product segments more on the specialty side, which are still a bit more insulated. But by and large, it's still a kind of a segment where there is a bit of oversupply. Demand is still not very strong, and therefore you are kind of seeing fairly muted kind of earnings outlook across most corporates that are kind of giving a guidance. Now, in terms of tariffs specifically, right? It's probably still too early. Trump is, as of right now, just using tariffs as a strong negotiating tool. And if you are seeing it is effectively working, right? India is trying to reduce tariffs. You are trying to kind of get, the US is basically trying to get some pound of flesh in terms of tariff reductions in order not to put on very punitive kind of tariffs against a particular country. We are going to have to wait a bit before you actually see this settle down to really understand where tariffs are going to eventually settle. It's important to understand that there's no way the US can actually implement the amount of tariff increases that they are talking about. It would cause inflationary havoc for the US economy. So you are seeing a lot of noise. You have to see how this settles down, and most importantly, how India fares on a relative context vis-a-vis other kind of economies. So if you are looking at the chemical sector, it's really what level of kind of tariff increases are there on India vis-a-vis China to really understand the overall impact. It is a space which has a lot of interesting longer term promise, but you are in the current environment, things are looking a lot more muted.
Looking a lot more muted right now and a lot of uncertainty actually around the tariffs. How is it that we're closing in for the day? And, at an index level, yes, we're pretty flat, but I can't say the same about the breadth of the market because that continues to reel under pressure. Even for the Nifty, we've come off a little bit, towards the dying minutes of trade, but the breadth is where all the pressure points are, be it a KEI, be it a Polycab, which is currently lower by about 18%, Havels, which has taken a knock of over 6%. Look at a PVR Inox as well. I mean, obviously outside of the wire and cable segment, that's also cracked very sharply, 7% lower as we speak right now. And then GNFC as well is seeing cracks of about almost 9.5% or so coming in. The breadth of the market is extremely poor, actually, if you were to look at it. It's a count of 174 standing to the declines, with just about 52 standing to the ups when it comes to the F&O universe as well. And barely financials are the only sector, I think, which is actually holding out. Let me also get in some BTST trades then. Naresh, what's your BTST list looking like?
So first would be a buy on M&M Finance. The stock has been making a good pace. So stop loss at 265, target price of 285. Second would be a sell on GNFC, but the stock is already corrected, so would keep it a pass.
All right. Okay, that's the take coming in on some of those interesting trading ideas. But Ashi, what happens to IT right now amidst all the tariff uncertainty and the US's positioning?
So at least as of right now, right, IT looks fundamentally kind of positive and seems to have more tailwinds than headwinds. The rupee depreciation clearly is positive for margins. If various things that Trump is doing does help kind of revive the US economy, you should see kind of demand revival over and above an existing demand revival that you are seeing. The BFSI segment is clearly a very important segment for Indian IT. That is a segment which is clearly bottomed already a couple of quarters back, and you are seeing increasing improvements. So I think IT as a segment is, you are seeing clear kind of tailwinds. The one important element is with all this kind of Trump uncertainty around various different things. What does he do for H-1B visas? And does he really try implementing certain measures where you have a greater amount of IT delivery happening onshore as compared to offshore? And does that have some kind of implications for Indian IT kind of financials? Still too early to kind of say. It's not that this is something which has been spoken of a lot. We aren't necessarily seeing sharp adverse news flow here. But just given the fact that Trump is looking at multiple different elements, that is something that one does need to kind of consider before going to a very strong, positive, longer-term outlook. And obviously, also with kind of IT, and we've discussed this in the past, AI is something which is going to be very important. We see this as being quite clearly positive in the nearer term. Over the longer term, it may have some kind of a deflationary impact.
So that's the take coming in on the IT space. But other than that, what we are seeing today is that the metal, of course, is another basket that is that could have a decent closing, at least for today. There are a couple of these news flows because in the international market, we are seeing that base commodities are holding up well. Like if you see the prices of aluminium, zinc, and copper, etc. And there was also a news flow that China is likely to boost the long-term loans to the steel sector. Not much reading into that yet, but indeed sounding positive for the metal space and specifically the steel sector. But Naresh, back home, any stock that is standing out for you on the technical front? Because stocks like Hindalco, JSW Steel, even Tata Steel, they are holding up even in such kind of a market.
So we are seeing some floppy moves out there. We saw, say, Hindalco make a spike and again pull back a little. We saw Tata Steel make a move 2 days back, then took a pause, and now today it is moving up. But overall, we are not seeing a sharp fall in the downside as such. So Vedanta at current levels could be a risk-reward trade, wherein the stock has support around this 400 mark. So if it holds about 395, 400, could see a bounce back to 430, 440 levels.
All right, Vedanta is the stock, as well as he also shared his take on Hindalco. But Naresh, before we wrap this day, your quick takes on Varun Beverages. The stock is hammered in trade today. Your thoughts here?
Breakdown, and it continues to be in a downtrend. say sustaining below 450, 55 makes it much more weaker only. So for now, one could keep a trailing stop loss at 470 and watch out for a reversal. On the downside, 420, 400 is a target price.